IDBI Gilt Fund is a medium to long-term debt fund investing in government securities. Would that be a wise strategy, keeping one's interest rate outlook? And would you recommend it to investors?
One is that, it could be opportune time to get into Gilt Fund for the opportunistic fixed income investor. Just the anticipation of rate cut and without any rate cut, the Gilt Funds have been able to deliver over 10% return over the past 1 year. The rate cut looks imminent. That is the consensus view, and might materialize in the next 2 quarters, maybe earlier. So the case for Gilt Fund remains strong, and we have seen that in anticipation of that, Gilt Funds investors, they have completely shunned they have avoided FMPs, and they have started moving into Gilt Fund and long-term debt fund or dynamic bond fund. They are finding larger allocation. So it might be opportune. This particular fund, no, you have too many proven funds. IDBI Mutual Fund is a relatively new fund company, and it is completing its range. So it's launching a Gilt Fund. Gilt Fund, there is a case. This fund, let it settle down and then invest. It's going to be an open-end fund anyway.
Right, let it settle down. Dhirendra, relegate bank debt as a short-term debt fund. Would this be a good time for investors to opt for this fund in the current scenario?
It's always a good time to be investing in a short-term bond fund for a short-term money. And most funds, deliver return in a very narrow range. And this fund will, it's just trying to behave differently. It's just trying to create a selling point for itself that it will be investing only in bank debts, which is, CDs, CPs, being a short-term fund. Bank CDs primarily. So from that standpoint, and most funds actually, their portfolio is focused there itself. So I think this is going to be a constraint in coming times, and it is going to be of appeal to some set of investors for whom this fund is getting created.
Okay, let's take a query on that note as well. And Dhirendra, our first query today is coming in from Kunal Mahajan. He would like to start investing in funds that give exposure to foreign markets like the US or China, and he wants you to suggest some funds that fulfill that criteria.
US funds, you have the Nasdaq 100, which is a fairly straightforward exposure and has done very well. And there are 2 other funds, and they are quite differentiated in their strategy. One is the Franklin US Opportunity Fund. That is going to be a growth fund and a fairly, growth at reasonable price kind of strategy. And ICICI Prudential's US Blue Chip Fund, which is going to be, a more conservative, value-oriented fund. So you have reasonable option to choose from. Likewise, the Chinese options are, varied. One is the Hang Seng ETF available. The other is, the JP Morgan Greater China Opportunity Fund, which has done reasonably okay in recent times. But depends, it's an extremely volatile market going by the broad indices which track it. And the third one is, Mirae Asset China Advantage, which is fairly proactively managed, and it gets you access to the mainstream.